Good morning, traders. Good morning, everyone, and welcome to this live trading webinar. How are you guys doing today? Is everyone all right? Please let me know. Do you have a clear picture and can you see me clearly and hear me? Please just type a quick yes or no in case you have any difficulties with the image and with the voice, with the sound. You can hear me, but you cannot see me. Can you see the screen? Can you see the screen? Yes, you can see the screen. Okay. Yes, no charts yet. Correct, no charts yet. That's okay. You cannot see me. Maybe it's something because I am using the OBS Studio today. So maybe there is another setting to do, but as long as you can hear me. Okay. Yes, class. All right. So, ladies and gentlemen, from the YouTube, everyone is fine as far as I see. So that's cool. Now, our risk warning, just to make sure everyone knows that this content is for general information only and is not intended to provide any trading or investment advice or personal recommendations, and simply any information related to past performance of an investment that not necessarily guarantee any future performance. And here at Admirals, sorry, just to change a setting here, maybe that's why you have the difficulties. Okay, I think now everyone can see the screen and myself also from the Zoom. Yep, so guys, we played the disclaimer. One more time, this content is for general information only and is not intended to provide trading or investment advice or any personal recommendation. I hope you listen to your weekly fundamental analysis this week. It's not that we have many major or significant news events, as it's the end of the month. That's the last trading week. So the markets are a little bit slowed down. Most of the events are on the third week with the interest rates, and the second week as well. So usually the fourth, or some calendar months they have fifth one, then they are a bit slow. Now let's change the screens and let's have a look at the calendar. Today there is, as you can see, there is no any significant news events as per this calendar here. Let's move on. Morning briefings, and today's top headlines: global military spending hits record aim, Ukraine war, China tensions. ThyssenKrupp shares thample CEO two-step down. Supreme Court allows state law climate suits against oil companies to proceed. Career nears deal for German industrial manufacturer Wiesmann. How Bud Light handle an uproar over a promotion with a transgender advocate. Options narrow for people trapped by fighting in Sudan. US envoy confronts Russia diplomat on Ivan detention at UN. Apple wins appeal in App Store case brought by Fortnite maker Epic Games. Google debuts cybersecurity forced AL system. Yep. Also this week it's earning weeks, guys. If you are into stocks, so if it's something that you find valuable, you can check also the stocks. I mentioned some things on the webinar, of course. Now back to charts, and let's start with the pound against the US dollar. We said that we are in this consolidation area. The market now made the double bottom and bounced. 2 days ago we had this dodgy candle and almost at support. Market yesterday put this nice bullish engulfing, trying to approach resistance. Now, as per our indicators, when it comes to a ranging market, it's best of use the RSI. That's the RSI 14 period, and the price makes a new high. This high here, it's lower than this high, or if you prefer, this high here, it's higher than this high here. The indicator made a lower high. This high here, it's lower than this one here. What does it mean? That the price made a new high, but the indicator failed to make a new high, and that shows lack in the momentum. So we call this negative or bearish divergence when this happens, and we do expect to see some weakness in the trend. Now this trending phase enter into a ranging phase now, because we can identify these few touches here, two at the bottom, and due to the many false breakout situation in the forex market, we have this and this a clear false breakout, so the price is trading between these boundaries. Good morning, Larry, Darshan, Roland, hello guys, Edward, Mihai, Modo, Oku, Christine, and everyone else that Matei, and everyone else that is here with us today. So we do expect to see some weakness in this uptrend. It came in this form of rectangle in the consolidation. We trade from the bottom. From now on, we can use the bottom to buy and the top to sell until the price will make a clear breakout and we can start trending again. But for now, we are right in the middle of consolidation. Yesterday, the reason I didn't enter at any trade here at the bottom is simply because the risk reward, if we entered here and we have a stop loss there at 78, 80 pips, or even if we put a stop loss below the lowest low of the consolidation, that's almost 100 pip, that's 100 pip accurately. Until we reach the top, we don't even make 100 pips, so it's not even one-to-one reward to risk. Therefore, it's not that favorable reward to risk, so I prefer to stay away. But if you are trading the 4-hour charts, the 1-hour charts, you can see clearly trends within these areas. And just to avoid any confusion, in this area here, as I show you guys, there are no trends. Trends, they are here. So now we are in a trending mode. We still have room to the upside, but that's only if you are trading the 1 hour charts. Let's move on. The euro US dollar. Another one that I didn't like it, to be honest, but doesn't mean the market is going to do what I like or what you like. The market is going to do what it's going to do. It was consolidating here for a while, and then it pushed to the upside yesterday. That was a good reward to risk. That's 57, that's 9, that's 70 so far. I'm not in this trade, neither in any 4 hour chart. After we finish the webinar, if someone was looking at the 4 hour charts and see this nice bullish engulfing candle, that was a very nice opportunity. Also, the market came from a nice uptrend line, and that means it's high probability trade. So anyway, I'm not in a trade. We look for the next one. Still bullish with that. Australian dollar, US dollar, I would really like to be bullish on that one as well, as to be consistent with the Australian dollar weakness, but also we see that, with the US dollar weakness, but also we see that Australian dollar appears to be a weak currency. Therefore, we're not going to look to buy it. New Zealand US dollar. I'm looking to sell this one because New Zealand is so weak overall. If I find an opportunity, I will be very interested to sell. So far, there is a valid downtrend line, as you can see. There is a resistance area here. There are multiple resistance. The price can stop and reverse. We wouldn't consider this support, this broken support, as a valid resistance, and I will tell you why. Because this one is what we call an inside support. That broken, so that becomes an inside resistance. Okay, just keep the last one. That's an inside resistance. Why it's an inside? Because it's on the inside of the current price. And if the market is, if the price followed by this point here, it interact with this level more than one time, when more than one time when it after it breaks, then it's not a valid one. We need to see a clear break of this area and the market move away from the area and come to retest only. In this occasion, we had a break, like here it was a false break, then the market touched for second time, the candle, one candle later, then a candle after, it touched again, then it touched again, it touched 4 times. So this one here now, it's not a valid, it doesn't make it a valid inside resistance. We have also the FIB tool to use. We can start from the top to the bottom. That's the 50%, that's the 61.8%, and you see the 50% somehow matches with this area also of price resistance, and maybe we can look for this particular area for the price to come if we are trading this daily chart downtrend. If we are trading the 4-hour chart, this is still relevant, but if we trade the 1-hour chart, that's not relevant. If we trade the 1-hour chart, we have this uptrend develop, higher highs and higher lows. So this high is higher than this high, and this low is higher than this low. So we have a full cycle, and if we believe that it's gonna fall down, we would like to wait for a break of this trend line and look for shorts. USD JPY on the daily chart. Looks like we are making higher highs here. I said yesterday that I would like to look for some bullishness, but not right from this rejection. Yesterday the market didn't move lower from this rejection here. It put this bullish engulfing, so maybe that will be a beginning of the move to the upside. USD Canadian dollar market struggled at this resistance. It still has bullish implications. Now we have the RSI above 50, so that's bullish. We don't have anything on the MACD. Euro JPY. This is our resistance. The next one, it's much higher. I'm just trying to zoom out and find the next resistance, which is this one here. So we do have our resistance in place. The market is currently at this resistance. After this this hammer candle, the market made a new high. It's very, very shallow retracement, but that's what the market did. The risk reward, it was 100 pips stop loss and it was 100 pips take profit. I didn't do anything with that. Yes, yesterday was a public holiday, Anzac Day. So it's still bullish in this one. The euro, it's a relatively strong currency compared to the other currencies. Pound, Japanese yen, still bullish. It's a nice trend. Market yesterday made this high in price. On the 4-hour chart, the only signal, it was this one here. That this candle closed at 12 p.m. Local time, broker time, or 10 a.m. GMT. So on the 4-hour, still bullish. Australian dollar, Japanese yen. Australian dollar is super weak. I'm not going to look to buy it against the Japanese yen. If Japanese yen is also weak, there is no point. New Zealand against the Japanese yen, I would like to sell it, that one, but also technically both of them are weak, so there is no need to get involved with this. The Swissy yesterday made another move to the upside. We reached at this resistance. Canadian dollar, Japanese yen, we marked this 50% retracement. We expect the price to show some rejection here. We had the candle, the bullish candle yesterday with a gap open at the gap here, as you can see, and close a bit higher. So today, if this is an inside candle, it means it's consolidated on the 4-hour and 1-hour chart, as you can see, this consolidation here. So today on the 4-hour chart, if we see some rejection here, or on the 1-hour chart, maybe some double bottoms, anyhow, the RSI is and the MACD, they both show some strong divergences. And we can use this information to validate this inside candle, because it's not a strong reversal candle. It's not a reversal. So it just indicates a pause in the market. That's why we can go to the lower time frames and find some reversals after this indecision on the daily. After this pause, the market maybe on the 4-hour chart shows a reversal price action, and we can use it to confirm the validity of that signal. Euro very strong. Remember, we used to initiate some positions around here and around there with the euro. It's been a while that I'm out of the position. The market put this nice bullish engulfing, and since then it created the move to the upside. The next area of resistance for me trading the daily chart, I use the weekly charts for resistance areas and support. For you, if someone trades on the hourly chart, they can use the 4-hour chart as their reference of support and resistance. Just one frame higher, it's more than enough. On the daily chart, we have this move to the upside. Now we have a confirmed uptrend. Of course, the 4-hour chart, very impressive. We can use the retracements to enter long. Be mindful, guys, because some of you asked me before. You see, when the market breaks outside of a consolidation, all the oscillators, all the momentum indicators, including the RSI, they will be very close to their overbought condition. And if we put the stochastic, most likely it will be above 80. That's its overbought condition. It doesn't mean we're gonna look to sell. It just means all this accumulation in price. It showed also it accumulated on the indicator. And always the indicator, the oscillators, the momentum oscillators, during a strong trending market, they're gonna be at their, if it's an uptrending strong market, and if it's break to the upside, it's gonna be at their overbought condition, and they can stay there for a long time. And we don't pay attention to this indicator. We pay attention to this indicator in a trend once we have a trend development and the trend is going on for a while. I hope that's clear. Euro CHF in this minor downtrend, also very messy here. I wouldn't look to get involved. Swiss franc, it's also strong as we analyzed. Euro pound, we have this area of resistance, then we have this area of resistance. For a trader on the daily chart, that's not help at all to trade this market, because there is no room to move. So that's the most accurate analysis of this chart. We don't pay attention to the moving average, traders, because the moving averages, as I told you, they are best used in trending markets. They are lagging indicators, they are not leading indicators, so we don't pay attention to them when the market is moving into a range. If that doesn't help you to have them in your screen, please remove them. You can remove them if you want, or if you're like me and you are okay, you just don't pay attention to them when the market is not trending, then just keep them on your charts. Pound Australian dollar, ascending triangle. If this is gonna break to the outside, we have a pattern that we're gonna trade the pattern. Pound CAD, another nice break. So traders, especially if you guys are intraday traders, now we had this nice break to the upside, both on the euro and the pound against the Canadian dollar. We are in our mornings, we are here in during the London session. In a while, in 5 minutes, the London will kick off. So Euro, pound, it's best to be trader on the London session. Pound CHF, again, pound, Swissie and euro, they are the top performance currencies, so we don't trade them against each other because we are smart traders. We also trade pound Kiwi to the upside because Kiwi is very weak. On the daily chart, we found this retracement candle. So this is our trend line, fib from bottom to the top. This is not also valid. So the area of support is this one here. The one is here and the other is there. For a deep retracement, market comes here, we're going to look to buy. Market comes there, we're going to look to buy. Aussie CAD, nothing to do with that. Both of them are very weak currencies. Aussie Kiwi, again, both of them are weak currencies. I'm not going to look to do anything. New Zealand CAD, same. Aussie Swiss to the downside, of course. Swissy very strong, Aussie very weak. This trend development, it's very nice to be followed. New Zealand CHF to the downside as well. Now the trend is overextended. We're going to wait for a retracement. CAD Swiss to the downside, definitely very, very nice trend here. Gold, we bounced off this uptrend line. We're going to wait to see if the market is going to develop that head and shoulder pattern. Kuber very sideways. Bitcoin, dodgy candle yesterday around 27,000. We'll see if the market is going to push to the downside or not. At WTI, a nice bullish candle here. I wouldn't say it's a bullish engulfing because it proceeded by a green candle, a bullish candle. So for today, very short term, we can look to buy, but for long term, it's better to just see the today's candle, and after that we can make a conclusion. So DAX, let's get ready for our trade. 5 minutes, that's the trades I like. That's where I like to trade the most. When we have a swing and before the open, the market made retracement. And if we break to the downside, it looks like it's this one here. No, it's this one here. How many? It's 30 points. And if we break to the downside, I will sell it right there, traders. So if we break to the upside, I will be long targeting somewhere here with my stop loss being below this area. If we're gonna trade to the downside, entry will be here and stop loss will be above this high. FTSE already on the sell-off. Dow Jones, nice bullish engulfing yesterday. Nasdaq, nothing here. And the S&P 500, bullish but broke the up trend line. So market open, now it's 10 o'clock. Microsoft, on the daily chart we closed below here. Now guys, just to let you know that in 3 weeks from now I will start the investing series webinars, and at some point we're gonna start with once a week. We're gonna learn basic things about investing, and every week I'm gonna help you understand more and more and more, and then hopefully we're gonna go to a more live trading as well, like we do here, and that will be at the New York Open. And we're gonna try, and I will try there to just do intraday purely. Gas showing some bullishness. Let's check gas and gas. WTI, silver, palladium, copper. Why I don't see any gas here? Okay, here is in gas. Yep, it shows some bullishness. Look, the indicator indicators with the end gas, you can see that the market made the market made almost equal bottom, not equal high, and the indicator, it's been a while that it's showing bullish divergences. I will call this transition in the price like a round bottom. It's a reversal pattern. Usually we find this on the daily and weekly charts, and it has bullish implications. So we're gonna look for some bullishness here, of course. The inverse head and shoulder pattern didn't work, but it looks like it's going into a round bottom. So we close this one, we cancel that one, and we have the sell limit order. Cup and handle, yep. So I got triggered to this one, to the sell order, so I canceled the first one. S&P bearish, Nasdaq bearish, as we can see from the candles. Dow Jones the same, FTSE the same. Wow, looks like it's taking the stop loss area, so I will be ready to close this one. It's on with a 1 minute chart. So here is the 1 minute chart. If the market it's gonna close above this area, I will be looking to get out of the position. Euro USD really cracking.